Independent emerging markets commentator Jeffrey Dennis joins us right now on the show to talk about this and the implications. Jeff, good having you. Thanks so much for joining us at Bloomberg Quint.
Thank you.
What's your sense? Risks off the table, and do you think that this will have a slightly materially longer term impact on how people view risk assets like equities?
Well, I think there's a good chance that's the case. I mean, clearly on the Trump on the U.S.-China trade deal, we do need to hear more information. On the surface, it sounds like we've got some sort of a deal, and I think what that brings you is the elimination of the next round of tariff increases, which I think is very, very important indeed, and that's been enough to trigger this very big rally in risk assets over the last 24 hours or so. We still don't really know how much of a rollback there's going to be, if any, of the existing tariffs. And I think that's one of the things that bothers me a little bit, that we need to see more medium term on not just no further escalation, but we need to see more of the de-escalation of the trade wars that we've seen so far. So I think we need follow through on that. And of course, as we all know on the program, President Trump often says one thing and does something else pretty soon after. So we need to see this follow through in terms of confirmation on the phase one deal and indeed what progress there could be on the phase two deal. But on the surface, it's very, very good for the world economy. Obviously, on the conservative victory in the apparent conservative victory in the UK election, very good for sterling. So one of the general things happening here, which is helping the risk-on environment, is that the dollar is weaker, and that always helps risky assets, including, of course, EM.
So what do you think this implies for the risk-on trade? Because, the markets, we just showed a chart about how the ASWI World Index is essentially eclipsed its January 2018 highs. So markets haven't quite not priced this in. Do you reckon that it's not fully priced in and therefore there could be more upsides?
I think there probably could be more upside in the short term for sure. I think no doubt about that. But I think what is overhanging all of this still, in my view, is what impact any trade deal, when we still, as I say, don't know to what extent there's going to be a rollback of the existing tariffs. And I think that's a very important point, what impact it has on the global economy going forward, and in particular, what impact it has on the risks of U.S. recession, which in my view remains significant over the next 12 to 18 months. So I think the euphoria is going to take us a bit higher in the short term, but then we need to see whether the trade deal phase one is delivered, and also whether the outlook for the global economy looks a little bit better on the back of that.
Just wondering, Jeff, would you believe that the first bout will rather see the DMs or the developed markets do well, and then the emerging markets turn will come? And more importantly, for the next 6 months or 12 months out, do you reckon emerging markets could actually be the principal gainer of arguably a bit of a risk-on mood?
I think there's no doubt that if we have a risk-on move, and the global economy looks okay from here and starts to improve at the margin, and the dollar continues to weaken, which, as you know, I've always argued is critical for the emerging market performance, I think you'll see EM outperform DM in 2020. I wouldn't be so cute as to say, short-term DM continues to do better until we have more details of this, and then EM does better into 2020. That's trying to be a little too clever, I think. I think what I would say is if this spells the peak or the worst of the trade war, and we gradually get some de-escalation, which has to include tariff reductions, just not the agreement to forestall new tariffs. But if that's what we get, and we also get, therefore, an improving economy, we eliminate the risk of U.S. recession short term, and we get a weaker dollar, then I think EM would outperform DM in 2020 without any doubt. But, there's still some risks out there, and frankly, we need more details on this phase one trade deal. That's the first requirement.